Hi everyone. In this episode we are going to walk through some of the Budget Act changes relevant to the local real estate sector. So the taxation of real estate transactions is one of the most detailed and complicated areas of our tax law. The basic idea is that the person transferring property pays tax at a rate on what is known as the transfer value of that property. Now there are many rates, and determining which one applies to your situation very much depends on factors such as the type of property, when you acquired the property, and who you acquired it from. As things stand today, the standard rate applicable on transfers is 8%. However, a special reduced rate of 5% applies where the transfer is made within 5 years of acquisition and the property does not form part of a project. A project being any property developed by the owner into more than one transferable unit. The Budget Act has, however, changed this exception slightly, and any transfers occurring after 20th March 2020 will not benefit from the reduced rate of 5% if the person making the transfer carried out works on that property requiring a development permit, and those works took place in the 5 years prior to the transfer. This would of course be relevant to anyone that has recently undertaken works covered by a permit. But there is an exception. And this exception applies where the property is being occupied by the person making the transfer as their sole ordinary residence. So the second thing we'd like to discuss concerns the way tax is levied when there is an assignment of rights under a promise of sale for real estate. A promise of sale is an agreement whereby the seller and the buyer agree to a future fixed price for the transfer of real estate, which in turn allows each party to conduct their respective due diligence exercises and obtain any requisite financing. Typically, the duration of a promise of sale would be anywhere between 3 months to around a year. Now, during that time, the acquirer may have a change of heart or possibly have some other reason to release him or her from the promise to buy, and as a result, the acquirer may opt to sell or assign his rights to acquire the property under the promise of sale to a third party. Under the existing rules, any consideration which is received on the assignment was not regulated by the special property tax rules, but treated as trading income and taxed in accordance with the ordinary rates, this being 35% for companies and progressive rates for individuals. During the budget speech, it was announced that the first €100,000 of profit derived on the transfer of any right acquired under a promise of sale would be subject to a final tax at the rate of 15%. The Budget Act has laid the groundwork for this change by making the relevant amendments to the Income Tax Act, and we are now expecting further legislation to precisely define those instances in which assignments qualify. That's it for this episode of Deloitte Let's Talk. We'll see you next time.